It's Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as a broadcast from Hampton Studios in Harare. I'm Ibn Mabunda. Let's get started. A dark cloud hangs over Zimbabwe's power supplies as load shedding intensifies across the country. Zimbabwe's national demand is 1,500 megawatts per year, while the national output at the moment is 1,100. The deficit is serviced by imports from Mozambique as well as South Africa. While government says that the current shortages are the result of water levels that have declined in Kariba, which cannot sustain the usual electricity output, as well as problems at the Wange coal plants, which have affected the performance of Zimbabwe in that regard. Meanwhile, analysts say that sub-market pricing at ZESA, as well as the nation's Forex concerns have actually affected the supply of electricity in the country. Meanwhile, following the just ended reporting galore, Delta Corporation is set to release financials for the year ended 31 March 2019. Delta reported $340 million in revenue for the half year to 30 September 2019. Delta will publish how it has performed over its trading year, but investors will be much interested in the performance of the corporation, particularly from October right up to date. In particular, of course, the investors would like to look at how the volumes have actually performed in recent months, as there have been outages in terms of, or stoppages in terms of the performance of the corporation owing to shortages of foreign currency. In the meanwhile, Pepsi, the competitor, has also gained ground in the market. As we make progress, the World Platinum Investment Council has released first quarter report for the 2019 year. Zim's first quarter output declining 4% to 110,000 ounces. However, national output is expected to be with the national average of 470,000 ounces for the year. Zimbabwe is the world's third largest platinum producer behind South Africa and Russia, producing 7% of the global output. Meanwhile, the People's Own Savings Bank released its 2019 financials. The bank reported net profit of $17 million from $11.36 million recorded in 2017. Net operating income scaled 18% to $44.5 million from $37.6 million in 2017. Total deposits growing 16% to $185 million. Well, just to get a historical perspective of how the corporation has actually performed over the past years: 2014 profit after tax of $1 million, 2015 7.9, skipping to 2017 at $11.4 million, and 2018 $16.9 million. This concludes our news bulletin. Up next is a news review. Please stay tuned. Welcome back, viewers. It's now time for news review, and with me in set is investment analyst Tinashe Kaduo. Tinashe, good evening and welcome to the show.
Good evening, Eben. Good evening, viewers.
Beautiful. Now let's get the ball rolling. Electricity affecting Zimbabwe and load shedding all across the country. What is your interpretation of the situation that we have at play?
It's actually, a serious concern, especially given the already existing economic challenges. But generally, Zimbabwe will always, produce less electricity when compared to what we consume on an hourly basis. So most of it we used to, to augment our supplies from imports from South Africa as well as from Mozambique. But what we have seen of lately is, these foreign, currency shortages. I wouldn't want to speculate much, but I really feel that it's actually a pain as well to the government. So maybe the government is now struggling to pay electricity for those imports. But as well, if you look at the local price of fuel, of your electricity when compared, to the regional averages. Our electricity charges are actually very low, implying that government has been, subsidizing consumption. But offset is that we are now experiencing these fuel cuts when we are about, to reach the peak of the winter, wheat planting season. And if you look at those winter farmers, the wheat farmers, they've been also, complaining about, your adequate electricity supplies. So it's actually, a very serious concern to the economy, given, the comatose we are in.
I realize. So what could we expect from government? Government says that these are issues to do with what we have, declining water levels in Kariba as well as problems in Hwange. While on the other hand, analysts argue that, look, these are sub-market prices that have actually affected the performance of the sector, as well as forex concerns in that particular regard. What is your assessment of that situation?
If you look at the statement by the government when they are saying it's because of low water levels, I'm actually concerned by that statement, because it's a statement that sounds like it's someone who has surrendered, who looks that okay, I don't have even solutions to this situation, so let me just blame something that I won't have control over it. But in essence, this is the problem that we have. We always experience, electricity challenges. And the major challenge is because we don't have sufficient funds to keep on importing electricity. We still rely on Kariba Dam and Hwange. And if you look at Hwange expansion, that equipment hasn't been being refurbished. And if you look at that time when they imported, a certain machinery that didn't fit, the Hwange's, required, activities there. That's actually a serious concern. Then at Kariba, that's another problem. You look at our neighbor, Mozambique, and even Zambia. They have invested a lot in fuel, in electricity production. But for us, we have been lagging behind, relying on imports. Then the foreign currency issue came into play. That's the challenge that we are facing. Then also the huge subsidy that is being offered, by the government. It's not sustainable. The government has, just to increase, the tariff. But if they increase the tariff, they actually have to assure the public that the electricity will be there. So I think that's the challenge.
So what's better, for the tariffs to be increased and everybody gets power, or we continue on this term?
When you are into production, or when you are into importation of a certain commodity, what's important is your legacy issues, the way you've been behaving before. If you are someone who doesn't pay in time, it means even your suppliers sometimes they will be hesitant to continue supplying adequate electricity to you. That's the situation we are in. Our relationship, I think, between ZESA and ESCOM, and even ZESA and that supplier from Mozambique, I don't think they are in a very good shape because of these forex challenges. They are into business. ESCOM is into business. It needs its working capital requirements on a daily basis, and we have been facing serious challenges in terms of making payments in time. It's not the first time when Zimbabwe was cut off from the South African grid, or even from the suppliers of Mozambique. We all know those. Those are the issues that comes into play each and every year, and the government, unfortunately, is not acting. What we need to do is to invest in new capacity and rely on ourselves. Let us invest. We know we have so many gorges and even some waterfalls that are able, to supply your hydroelectricity, as well as we have some dams that are actually lying idle. For a nation, in this 21st century, we shouldn't be relying on Kariba alone.
I realize. Okay, now to make progress, we've got information that's just coming in from the World Platinum Investment Council, and according to their quarterly report, Zim's output in the first quarter actually declined 4%. However, the story is that the WPIC expects that by the end of the year, Zimbabwe should have, gained back its momentum, and we should actually have our usual levels of production at 470,000 ounces.
If you look at in terms of the business environment, how 2019 started, we started, with a lot of disruptions that negatively, affected your production. You look at the January, disruptions where there was, those price hikes in fuel, which caused those protests. Most companies they were affected, and even production was affected that way. Then you look at in March, the advent of the interbank. It was another disruption that also, affected your production decisions. And also your production, it's a matter of confidence. If the year started on a slow note, it means that, in terms of expanding your capacity or ramping up your production, you tend to slow down until you see signs of economic recovery or signs of improvement in terms of the environment. So what's playing in the platinum sector is actually, a matter of confidence as well. But prices, international prices, they also started 2019 at a low note. They were below, your $700 per ounce for platinum, but they managed, to improve around February to above $900 per ounce. But if you look at the background, prices of platinum, they used, to hover above your 1,200 per ounce, per platinum ounce. So $900, at $900 or below $900, and the current one it's actually below, it's around $875 per ounce. It's actually, very low compared, to the past previous 2 years average. So I think the price itself, it's not an incentive for production. But another thing is our laws as well, where the producers are being taxed for exporting raw platinum. This is a law that was actually implemented by the government to force those platinum players to invest in value-adding capacity. But that's actually another cost, to business. If you look at it with together with the 2% transaction tax and even increased revenue collection and even increased regulatory pressure from the government itself, it makes, the environment in terms of doing your business very tough. So to speak to your production, you tend to slow your production given all those things.
But just to stop in your text, do you think that Zimbabwe will be able to meet that national output of 470,000 ounces of platinum, given what's actually playing out in the country?
We are still early into 2019.
High cost of production. Forex shortages. There's
and now we have electricity issues. But the good thing is, major players or the major players in the platinum sector, they import that electricity on their own. So I hope that maybe if the government will continue to provide adequate forex for those players, maybe
from where? We have the interbank market system. Where are they going to get that?
What I think might play out is in terms of having production meeting your previous year's levels. I think this year might be challenging given what is actually playing on the ground. But it depends now on how the government will try to resolve all these situations. Maybe if the government says that okay, we'll continue supplying or continue prioritizing your payments for electricity, I think those smelters and those production will continue working. But if the government now doesn't provide your sufficient forex to your platinum players, I don't see production being ramped up. Maybe given all those disincentives and even taxes that are choking your expansion capacity, I might see output going down drastically.
Right. Now let's talk about POSB, the financials, profit after tax of $16.9 million coming from $11.4 million. What is your assessment of the performance of the bank?
It was actually a very good performance, and it's something that I might smile for given what we have been discussing before.
Okay.
This is something that can put a smile on my face. But if you look at it, what has been driving this growth in profits is the bank's expansion into retail and its strategic partnership with agencies like your World Remit and your Mukuru. It's actually a bank that has been investing much in those relationships. But also of note, it has been also expanding, introducing new products to increase its fees and commission income. If you look at it, maybe this is the cost, the graph on admin expenses. What's positive there is the bank in this highly inflationary environment, it actually managed to contain costs. Costs have gone up by just 4.2% on an annual average over the 5 years. Then on a year-on-year basis, they just went up by a margin of 5%. If you look at your staff cost, which constitute I think about 11.3 million out of the total of 16.4 million total costs, staff costs they actually went down despite the inflationary environment. But this is actually a parastatal. It's one of those parastatals to me that I consider as performing very well. And you look at those cost structure and even the ratios that speaks to cost, your cost to income has been falling down, implying improved efficiency. The cost of funds also has also gone down, implying also as savings, from your borrowing expenses. The return on equity at 27.8% and the return on assets at 7.87%. It means it's a bank that is actually sweating its asset and sweating its capital, for the benefit of the shareholder. To your income component, we have seen fees and commission, rising, very fast, from 19.4 million in December 2014 to the current 27 million, up from 23.6 million last year. What drove the fees and commission income, like what I said before earlier on, is its investment in new products and even its investing in digital platforms. It's actually a bank, that's right on 34 branches, but with 343 agencies, all dotted, across Zimbabwe. And it's one of those banks that was more aggressive in terms of financial inclusion. Of importance there, it actually ventured into a women business where it is actually financing those women in business. Why women? Women are one of your marginalized segment of the community, and the bank's strategic initiative to have a certain portfolio or a certain business that is actually looking into women, it's very positive. It is also a microfinance unit which has also helped in terms of growing its consumptive loans. The net interest after provisions, the bank also, POSB, actually benefited from those savings from your cost of funds, and as well as the growth in the loan book. In terms of distribution of the distribution of your net interest income, you are seeing that 66% of the net interest income is coming from your individual loans and mortgages, whereas your corporate it's just only contributing 1%. This actually shows the strategic initiatives of the bank, or how it is set up. It's a bank that targets the lower end of your market, your individual retail clients. That's where its income is coming from. Then 20% from money market, those are your interbank placements, as well as a bit of your securities trading. It actually including the savings bond and other money market products.
But can you talk about the decline there from 3% to 1% in terms of the corporate and the SMEs?
The decline, to me, it was in terms of absolute terms. In terms of relative terms, yes, you are seeing it as big, but in terms of the real numbers, in absolute terms, it was fairly flat. Why the decline now? It was because of this sharp rise from 63% to 66% of the contribution of the individual loans and mortgages. So it adds into the contribution of your corporates and SMEs. But if you look at its strategy, it's not a bank that focuses on that segment of your corporate strategy. It's a bank that focuses more on the individual side. But then another contribution there, maybe the 9%. I think sorry viewers for that, we didn't include the label for that. That's your microfinance unit, where the income from the microfinance business, it went up from 8% in terms of contribution to 9%. This is the structure of its asset sheet, where your total assets have been growing at an annual average of 31%. That's actually an impressive growth, and it is actually a result of growth in your loans and even its holding of government securities. Deposits have been also going up because of its aggressive, acquiring of new customers, of new retail customers to be specific, and its strategic partnerships, with remitting agencies like World Remit. It will also help it, to acquire, those cheaper deposits, and also even have, certain deposits in forex. Your RTGS balances, they also went up with a constant annual average growth rate of 56%. On an annual basis, on a year-on-year basis, they also they went up, implying, improved, liquidity position of the bank. Yeah, the non-performing loans, yes, they've gone up 13.2%. This is actually, they've gone up to 11.4%, and in terms of, absolute terms, they're 13.2 million. When you increase lending, to especially individuals, most banks or most players in that sector, they consider it, as a more risky area. And then also, if you look at its distribution, this bank's distribution in terms of its branch network, it's one of, those banks that is much into your rural areas as well, and is also, offering, financing solutions to rural areas and farmers as well. So some of this growth in non-performing loans, it's your seasonal growth, which is related, to your lending that you have offered to the agriculture sector, or to those individuals that rely much on farming. And farming is a seasonal business. Sometimes you invest in it today, but you reap the returns after 6 or so years. So sometimes at a certain period you won't be earning much from that from that asset, but after that earning season, when they start selling their produces to the market, then they'll start repaying back to the bank.
Sounds a very optimistic interpretation, but the figures seem to be telling a different story. There's a significant jump there. I mean, you look at the stats there, that's an increase of about, of about 60% roughly. But I'm saying, is that healthy in terms of the progression of the bank? I mean, should the bank continue to pursue such a strategy? What is the, in terms of sustainability, what is the longevity of such a strategy in that regard?
But if you look at what actually happened in terms of this reporting period, it's where maybe we are moving from an environment where they used to report according to IAS standard, and they came in IFRS. So in terms of that transition, sometimes your assets, they will be downgraded or rated downwards. So you might see, that increase in non-performing loans. But also, any aggressive expansion comes at a cost. This is a bank which is actually there for privatization, and the government is looking for a strategic partner for it. So maybe the other initiative that POSB has been implementing maybe was to grow its assets, its earning assets, but that aggressive growth, it comes at a cost. But at 11.4%, when considering that there are either large banks which have non-performing loans as high as 24% in this environment, 11.4% to me is not a figure that you would say you would be worried.
I realize. Well, thank you for the insights, and thank you viewers for staying with us. Up next is a look at Markets Daily. Please stay tuned. Welcome back, viewers. It's now time for Markets Daily. And joining me for conversation is Anesu. Anesu, good evening and welcome to the show.
Thank you, Eben. How are you doing today?
Won't complain. You don't get better yourself.
I'm all right.
Beautiful.
Let's just jump straight into the markets today. Now, the All-Share Index opened the week up 0.59% for it to settle at 142.46 points, while the Industrials Index settled at 476.11 points after adding 0.62%. Now, the Minings Index did come off 1.23% for it to settle at 187.06 points, which was consequent to a couple of counters within that index coming off. Now, Econet did let up 0.36%, so did its spin-off Cassava Smart Tech coming off 0.28% for it to set at 109.98 cents. Now, Delta, Old Mutual, and Tadengo were the only counters in the positive for the top 10 index, which did add 0.07% for it to set at 134.71 points, which then leaves us with just only 4 counters on a year-to-date basis performing in the positive as at the moment, with only 1 counter in the negative for a month-to-date perspective. Now, for our weekly trend, the All-Share Index has the weightier movement as of late, coming up 3.18% after having settled 141.62. Now, today, the Miners Index did come off 1.63%, but then it is still ahead its weekly performance by 2.87%. As we can see also graphically there, it was a red line, but then it is still above its last week's performance of 184.11 points. Now, the Industrials Index is up 3.16%, while the top 10 index is up 2.97%. Now, the stock exchange had about 20 counters that exchanged hands today as the week opened. 13 of those 20 counters were risers, and 5 counters were in the negative. Now, Power Speed had a 5-day session where it was stable at about $17.98. Now it has come down to 16 cents, accounting for it to be the worst performing counter for the day, after having let up about 11% from its prior session's trading price. Star Africa Rio Zim, which is the reason for today's Minings Index shed, which came off 1.71% for it to settle at 165 cents, was the third worst performing counter, while Econet and Cassava, we already touched on those. Now, for the other end of the yardstick, where we had 13 bulls, Medtech was the leading counter, having added about 26.32% for it to settle at 24 cents. African Sun Internal did trail that set of bulls, coming up 16.63% and 15% in that regard. Now, Unifreight did mimic that rise by 15% as well, for it to settle also at 9.2 cents, coming after Journal. Now, RTG did add about 14.58% for it to settle at 5.5 cents. Now, as we round up the market today, we have a look at our forex market, where the interbank rate has continued to weaken. It is now trading at 3.34 to the dollar, while the parallel market rate has also weakened to 4.95 to the dollar, and the Old Mutual implied rate is now at 5.62, while pretty much consequent to a heavy drop in the Johannesburg Stock Exchange counter, vis-a-vis the increment in today's ZESA counter gain.
Well, thank you, Anesu, for the updates. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From the Equity Access team and I, thank you and adios.